Welcome everybody to this video. My name is Ali. Today we're going to discuss chapter 4 of the course Crypto for Beginners. In this chapter, we are going to discuss the top 5 indicators that I used back in the days and what I think is one of the most important indicators to use as well. And depending on your way of analyzing the charts, you can have your own uh, way of analyzing the charts with your own indicators. So, but this is just my way of how I look at the charts, and I want to share it with you guys. So let's jump into the presentation. So the table of contents. The first part we're going to talk about the general rules, the basic rules of how to use these indicators and applying them to the charts to have a better perspective on the market and the better expectation what is yet to come despite all the negative FUD that is going around in the media and all the negative emotions that is in the market. The second part, we're going to talk about the indicators, the basic indicators that everybody should know. The third part, I'm going to explain the indicators, and the fourth part, I'm going to discuss all the indicators that I use. And today is the 17th of December 2021. I use a lot more indicators, but it's situational, the way I want to look at the market from a different perspective. So you will have to find your own way of analyzing the charts and finding your own indicators, but make sure you understand these first before we jump into more complicated ones. So the general rules is it is necessary to use multiple indicators to get a clear interpretation of the possibilities of the market structure. It's like in everyday scenario in our lives, if something happens, you need to have different perspective on the situation before you can judge something. It's like you have a piece of a puzzle, but it's better to zoom out to see the whole picture instead of one piece of a puzzle. That's basically it. Pick 3 to 5 indicators. Don't use over too much. Don't use too much indicators. Otherwise, it will be too too much information, too much perspective, which causes chaos in the charts. That happened to me back in the days because I was really curious what all the indicators mean, how you could connect them with one another. So the sky's the limit, but make sure like to keep it clear and simple for yourself. That's what you got to do. All right. And when you're analyzing the charts with the indicators, you need to have confirmation from other indicators as well. One of the indicators is like the news, the macro trend, the micro trend, the fundamentals, and the technicals. We're focused on the technicals right now, but if you're analyzing the chart on a technical perspective, you got to realize that the market can move 3 ways, which is up when the markets are bullish, when the markets are correcting, and when the markets are consolidating, meaning they're moving sideways, which is happening right now with today's Bitcoin price. So as a trader, it is like nearly impossible to predict what is going to happen with the market because the market is controlled by higher institution with a lot of liquidity money to move the market in their way so they can maximize the profits. But we as traders, we need to analyze when is the good time to step into the market, when is a good time to step out to take our profits. But we can have a clear estimation of what the market is going to do. So for your own personal experience and learning curve, we need to always evaluate what our perspective was in the market. And if the market did something else, we need to realize like what did we do wrong in our analysis. So this is like a you learn along the way. You can never be perfect with your analysis. That's why I love the market so much. Everybody has a different interpretation of what the market's gonna do. Some people are really bullish, some people are really bearish. It's all good, but we need to respect our perspective and visions of others, and don't be too um, don't be selective when you're looking for news in the media, because if you want to be bullish, you're unintentionally going to filter all the information and gonna look for a bullish indication. And if somebody shows his or her perspective about the bearish scenario, you become agitated, you become frustrated, and become like a little bit toxic towards the other people. That's what I see a lot on happening on Twitter. So don't do that. Just respect their vision. Nothing is like guaranteed. We can always tell who was right and who was wrong afterwards. What happened? All right, if you want to do leverage trade, always make sure to have a risk to reward ratio of 1.5. That's what I learned as well. I'm gonna explain more in details what this exactly mean and in chapter 9, so don't worry about it. All right, and also one of the most important thing also is to reflect on your mindset and current strategy. Reflecting is key. This is how you improve as a trader. You learn from your mistake. You learn along the way. If there is no clear trend present, wait it out. Sometimes we know the market is going to dump. You need to wait it out to see what the market's going to do. For example, if a child is going to high school, you don't know what he's going to do, if he's going to drop it, if he's going to succeed. Just wait it out a little bit. Let's see, let him make some exams, and you can see on the result if he's going to be successful or not. It's the same way with the markets. The markets need to mature. That's what I call it, maturing. He needs to choose a direction. And also the people, they control the market, so we need to look at a lot of perspective in order to see what the market's going to do, if they form clear patterns and so on. I'm going to discuss this in the upcoming chapters as well, so don't worry about it. So what you got to do as a trader is patience is key. If you want to be very successful as a trader, the first characteristic, what you need to focus on is patience. Have a lot of patience. Like it's like li- like a um, like a tiger. You know, a tiger doesn't run after every animal that he sees. He waits it out patiently, and if he sees like this is the golden opportunity, then he runs after it. If he chases every animal around that he wants to eat, then he will become exhausted. So you need to save your energy. It's the same thing with trading. You need to mentally be prepared for what is yet to come, because it's going to have a direct impact on your investment and on your money, which makes you emotional exhausted. So keep that in mind. Sometimes the market is unpredictable, so you gotta focus on the fundamentals. The fundamentals is the first most important indication, and afterwards, then we have the technicals. If those two align with all the indicators, then it's a good way to make a decision for yourself. All right, let's go. The top 5 indicators we are going to discuss is first the hash ribbons, the second the trend, third the volume, the fourth is we're going to discuss the stochastic RSI and the relative strength index, and the fifth we're going to discuss the exponential moving averages of 50, 100, and 150. You also have SMA simple moving averages. It's basically the same thing, but just so you know how you have to and how you should interpret these indicators. All right, these indicators are ranked based on my personal success ratio, so you have to find your own, but at least understand these 5 basics one before you going to adopt new indicators. So the hash ribbon, what is the hash ribbon? So if you look at the Bitcoin network, we know that the Bitcoin network is decentralized. So it's being kept alive by the miners. And the hash ribbons indicates the behavior of the miners. So if Bitcoin is being kept alive by the miners, it means that the miners are the ones that who receive Bitcoin first. So if their behavior is going to be bearish, then the price is going to be bearish as well. So we need to keep that in mind, what's going to happen, how they behave, and what impact it can have on the market, because they're a very important chain in trading as well, especially trading Bitcoin. So first, okay, we have to realize that the Bitcoin halving, it happens after 210,000 blocks out of my head. So it's approximately 4 years. So after each 4 year, you will see that the Bitcoin reward will get halved. So back in 2009, we had 50 Bitcoins per block. In 2012, it was 25. In 2016, it was 12.5. And in 2020, it's 6.25, which means that it will become scarce over time. And we got to realize that 90%, yes, 90% of all Bitcoins have already been mined. So the last 10% is going to take like over 10 years, or I don't know, like over 10 years in order for all Bitcoins to be mined. So we got to realize it's going to be really scarce to get at least one Bitcoin. So and yeah, it's gonna increase in price. So if the supply is gonna decrease and the demand is gonna increase, the price will increase as well. So the Bitcoin hash rate is very simple. You gotta keep this in mind. If the Bitcoin hash rate is over 100%, it means that the miners are selling more than they mine. So the MRI is the miner's rolling inventory. If that is above 100%, it means that they are selling. If it is below 100%, it means that they're holding their Bitcoin. Okay? So the miners are the first who is going to receive the bitcoins, and if they tend to sell their bitcoins, it means that the price is gonna decrease over time. Why do they need to sell it? Because those miners, they have fixed costs such as electricity, rent, the machines, the mining machines, employee. They need to eat and drink, salary, and so on. These costs, these fixed costs, will also keep getting more expensive over time because they need to upgrade their equipment and so on. So sometimes it is not profitable to mine. So what they're going to do is they're going to take the profits by selling the bitcoins on the market. All right? And this will have a direct impact on the market as well. If they tend to trade on the spot market, if they're going to over the counter, it's gonna be a different story. You will learn about it along the way. Don't worry about it. So keep that in mind. Above 100 is they're selling. Below 100, it means that they're hoarding. Hoarding means holding. So I'm going to show you guys a website which is called buytree.com. So if you go to this website over here, this is the website buytree. And then you come on this website, which is this tab. It's the same thing. You click on Bitcoin and then you will see the MRI. The MRI is below 100%, which means that the miners are now holding the Bitcoin. They're not looking to sell it, right? Okay. The hash rate, the total hash rate. Okay. The total hash rate is basically the power. The higher the hash rate indicates the more healthy the network is. So if we have a lot of computers mining Bitcoin, it means that there's more control over the market. So all the computers need to validate all the transactions and have the same outcome, which means that the network is more secure. Well, what's going to happen that if sometimes you see the hash rate, they will spike and they will drop, they will spike, they will drop, they will spike, they will drop. It becomes sometimes it is just not when it gets when the hash rate is going to increase, it means that it is more difficult to mine a Bitcoin, which means that the competition of getting mining a Bitcoin will get harder. So back in the days when it was also stated in the book the Bitcoin standard. Back in the days there was a big family company. Um, they were buying all the silvers on the market, so they had a big position in silver. And when the miners saw that the price of silver was increasing, they were mining silver like no tomorrow. And when they had a lot of silver, they dumped the market, and the family company, they become bankrupt. So what Satoshi Nakamoto did with Bitcoin is that if the miners is increasing in amounts, it will become harder to get Bitcoin. And if the hash rate is going lower, it becomes easier to mine Bitcoins. So this means that it is a non-compete clause. So the miners, they cannot totally control the market. That's what I love about it, about this network. So higher hash rate means harder to mine, lower hash rate means easier to mine. And the difficult will get adjusted after every 2016 blocks, which is approximately after every 2 weeks. So I'm gonna show you guys another website, which is this one. The hash rate, you just have to Google Bitcoin hash rate, and then you will automatically come to this website. We saw that in May 2021, China, and we had the Tesla. They were talking bad about Bitcoin again. China was banning Bitcoin again, meaning that the miners were all, um, yeah, they removed all their equipment. The miners' factory, they were closed, and they had to move back to America. So what happens was we saw this increased drop in the hash rate, increase drop. And what happens now is over time, you see that we reached a new all-time high. So we got to realize, guys, we have a lot of situations where the hash rate will will um, will increase and decrease over time. But when it decreases, it is like basically like resetting. So we have a lot of new. If you look at the hash rate, these this drop indicates that something happened in the crypto market. Okay, so we need to realize that these numbers, these data, they tell you a message, and we need to understand what happened with this price hash rate drop. It it was because China was banning Bitcoin, and the world was negative about Bitcoin. So the miners were closing the factories, and they were moving to America because it's more um, profitable to mine in America. So that was the story back then. So we got to realize, like, if it drops, don't worry about it. It's normal and it's healthy in the market to go to a new all-time high. All right. This is the hash rate number, which is the hash rate number of a block. We already know that. Okay. All right, let's go. The hash ribbon, you can also have an indicator and apply to the charts on tradingview.com. I'm going to show you guys that, but first I'm going to explain to you guys. So the indicator shows like when it's a good time to buy and when it's a good time to sell. So we got to realize that when these lines are narrowing each other, it's a good sign to sell your position. If you're swing trading or if you're like in a leverage trade or whatever, you need to be prepared for what is yet to come. This when they're crossing and you should see um, a red color in the chart and the hash ribbon indicators, it indicates that the miners are capitulating. So the markets are falling. But this scenario, what is displayed in this image is because of the COVID. Because of COVID-19, it was recognized as a pandemic by the World Health Organization. So this is what they call a black swan event. Nobody could have prepared for this. It was just unhealthy. And normally, this is what it looks like. It will drop like maybe 10 to 20%, and then it will increase over time. Every time we see this buy signal, the market's going to increase. You see it over here, buy signal. You see here, buy signal. I'm going to show you guys on the chart as well. So depending on your trading strategy, you need to realize that when it's a good time to sell, when it's a good time to buy. If you're a long-term investor, just wait for a blue signal and then buy. Simple as that. I'm going to show you guys and prove that to you guys. We're just going to open tradingview.com, which is over here. I owned it already. And we're going to the indicators over here. And we look for hash ribbons. This is the one that you have to look for, okay? And then favorite it, click on it, and then you will see. Simple as that. This is very simple what you gotta see. So we have this blue indicator over here, which shows that you have to buy this asset. When this indicator shows, the markets tend to increase. Every time the buy signal over here, the markets increase. We're gonna zoom in a little bit more. The buy signal over here, the market increase. The buy signal over here, the market increase. It has proven over and over again that this indicator is a pretty reliable indicator that if you're going to trade based on these indicators, it's a good way to make profits in the market. All right, let's go back. So there's also another indicator which is called the trend. There's a saying in the trading world which goes, the trend is your friend until the end. All right. So if we analyze the charts, we need to analyze the chart on the longer time frame because there's also saying longer time frame is king. The longer the time frame, the more you see what is happening with the market, okay, the macro trend. And that's also another thing which goes like trend first, indicator second. So I'm going to show you guys what the trend is. The trend is, how can you determine the trend? Let's say we see that the price of Bitcoin is bouncing between these two lines, okay? So every time Bitcoin bounces against this yellow line over here, it bounces back up. So this means that this yellow line over here, this one, gonna make it a little bit thick. You see that this line is a clear support, which means that this line is a support trend on the daily time frame, which means that if Bitcoin breaks this trend, it means that this yellow line is not our friend anymore. So we have to look for another uh, support line, which is over here, this one, and then this one. This is how the market works. If the trend line tends to be broken, the market becomes very volatile. Okay, and we also have like these fake wicks. The market was under this line and then it went back up straight up. So this is just to scare the market and to liquidate all the over leveraged people. All right, let's continue. So the trend is really important to keep an eye and track of that. So if you want to buy Bitcoin, just follow the trend. All right. All right, this is what we discussed as well. And of course, the time frame, I'm going to show you guys as well the time frame, why it is so important. Because if we go to the Bitcoin chart, we see different time. We can analyze the chart on the weekly time frame, monthly time frame, daily time frame, and 4 hourly. Let's say on the 4 hour, I've also drew a line. So let's just do something like this. I'm going to show you guys something. Oh, excuse me. Let's delete it, delete it, delete it, delete it, delete it. So you guys will understand how I analyze the chart. We see that the price of Bitcoin is like respecting this line, okay? This one over here, this one over here. The moment Bitcoin broke this line, it really decreased very fast, 16% under this line. And then it went back up and it came back into the zone. So what the chart is telling me now, that it's telling me that the price of Bitcoin, oh excuse me, I need to delete this, yeah, is forming a new trend, which is this one, like this. Gonna make this white. So what I'm looking for right now is if the price of Bitcoin is breaking this line, this white line over here, it's gonna decrease. So the target of this price will be somewhere around 39,000, 40K, something like that. So that's why I'm keeping my eye on this chart, because it's a make or break it move. All right, so we can see that the price of Bitcoin is forming a trend in a trend in a trend in a trend. That's what we see. It's the same thing like this. The moment Bitcoin, let's see, how can I draw this? Something like this. The moment Bitcoin broke this line, this white line over here, it decreased, and then it chose another direction. All right, so this is what we got to realize. But this is on the 4 hourly time frame, so we shouldn't freak out. If you look at the daily time frame, we can still see that Bitcoin is clearly trading within this range. Gonna make it yellow. This line as well. Make it yellow. Boom. So as long Bitcoin respect this line over here, we're good. I don't mind if Bitcoin goes to 45K or even to 42K. I don't mind because it's still healthy. And then it can bounce over here and then it's going to increase again, hopefully. That's my expectation of Bitcoin right now. So that's what I mean. Like if you zoom in too much, you become too emotional. You see a lot of trends, but you have to look at the bigger time frame. Longer time frame is king. All right. Let's go, continue. The volume. The volume basically indicates if a breakout is legit or not. If there's enough follow-up by the traders to move the market in a certain direction. Let's say the market's over here, you can see in this chart, is breaking out. You see this white line over here, there's the resistance line. The market tends to break out. The green, if you look at the green circle, the volume is healthy, which means that the market is actually breaking out. But over here on the orange circle, you can see that the market was trying to break out of it, but it did have enough volume, which means that it was a fake out and it went back to the support line approximately. So all the people that were in leverage position trading the market, they got liquidated or their stop loss got hit because then they didn't wait for the confirmation of the volume. But we got to realize that the volume indicator is a lagging indicator, so we cannot use it beforehand. So it's still, that's why I don't use it a lot that much, but I use it afterwards once the breakout happens. So it is important to see this type of scenario. So I just made a scenario table for you to understand this indicator. So if the volume is increasing while the trend is rising, then it's bullish. So the trend is increasing and the volume is also increasing, means that the breakout is legit. So there's enough follow-up to let the price go higher, go up. So if the volume decreases, there's not enough follow-up and the price is falling, that means is that it's actually bullish because the market is not gonna crash. There's not enough people to sell the asset. That's how you gotta see. So if the volume is increasing while the price is falling, is in a downtrend, then we see that it is bearish because a lot of people are selling. So, and if the volume is decreasing, not a lot of people are selling, and the price is falling, we shouldn't be, but then it means it's also bearish. It's rising, excuse me. Let's say that the volume is decreasing and the price is increasing, but there's not enough follow-up to make this breakout legit, then we can expect a fake out, which is displayed over here in the orange circle. All right. Okay. What did I discuss over here? Yeah, that's basically it. The stochastic RSI is an indicator when we can see if an asset is overbought or oversold. I'm gonna explain you guys the simple stuff, which you gotta realize. So it's you can this is the way I memorize all these indicators. Is basically very simple: 80, 50, and 20. These are the three levels that I need to realize. So this is a summary of how this indicator works. If the stochastic RSI, you can see this is 100%, this is 50%, this is 0%. If the stochastic RSI is 80 or above 80, which means that it's overbought, it means that the price is really bullish. Look, you can see over here the market is at 80 and it's increasing, means that the price is increasing as well. You can see it over here. And the moment that the 50 level is being respected as a support, we can see this. So meaning everything above 50 is bullish. So if the price, the RSI is bouncing on the 50 level and is going up again, then means that the price is bullish. But if everything goes below 50, then we got to realize that this is bearish. So when it's supporting the 50 level, respecting the 50 level, you can see over here, we can see that the price is increasing. And if it's below 50, we can see that it's decreasing. Simple as that. So everything above 50 is bullish, everything below 50 is bearish. And you also need to look at this on a longer time frame. I'm going to show you guys how to do that. So we have this chart. We're just going to use the indicators. Let's see, do I have it? No, I don't have it on. Let me use my template. So this is the RSI. This is the stochastic RSI. On the longer time frame, we can see this is the 50 level. It's above 50, which means that it's gonna turn into bullish. So if I look at this chart right now, Bitcoin is now trading around what's the price? 47K. So this one is above 50, and MACD is gonna cross bullish, and but the RSI, which is I'm gonna discuss later on in this chapter, is, let me see, that it broke. Oh, it broke the trend. Nice, sweet, sweet, sweet. Oh, excuse me. Let's make this thin and white. Yeah. Yeah, perfect, perfect, perfect. All right, so this is, if I look at the chart right now, it looks really bullish because it's, first of all, it's respecting the trend, the support line. Second, the stochastic RSI is above level 50, and the MACD is gonna cross bullish again, and the RSI is still below 50, but it broke out of this resistance line. This indicates that it's really bullish, in my opinion. So I can expect a bounce here in the price and then increase and go to higher levels. That's what I expect. So this is how I analyze the markets in a fast way. So you gotta think like quickly when you analyze the charts. The relative strength index, they also indicates where the price is gonna go. So it's the same thing. Everything above 50 is good. Everything below 50 is bad. So the the relative strength index means the buying pressure. If there's enough strength in the market to move a certain way. So in this image, we can see that the price is forming a lower low. But in the RSI, the relative strength index, we can see that the RSI is forming a higher low, which means that the trend is reversing. And if you trade based on these hidden bullish divergences, it means that the trend is going upside. While it was going down, it's choosing a new trend, is going to reverse, meaning going to the upside. So this is also a clear indication that the market has bottomed out and we're going to the upside. Maybe we can see it over here as well. Well, this is what I see then. I'm going to show you guys. We can see here a let me see. For example, here, look, I'm gonna show you guys. The market goes sideways over here, okay? And the RSI makes a higher low, which means that the price is reversing. That's what happens. And we can see the same thing over here. The market's going sideways and the RSI is making a higher low, which means that it's showing a hidden bullish divergence. So my expectation is we're now trading around this level, the support level. We're going to reverse. It's not going to increase right like this, but it's going to increase something like this, and then it's going to go higher. That's my expectation. Every time we see this price touching this support line, the market is making a bounce. So that's my expectation. First of all, we'll look at the trend. Second, we'll look at the indicators, and then we'll look for confirmation. Simple as that. That's how you analyze the charts. All right. So once again, the bullish divergence, the chart shows lower low, and the RSI shows higher low. That's an indication when the market goes uh, bullish again. So the AMA stands for exponential moving averages. It's the general price trend. You can determine if it's overvaluation or undervaluation. You can apply this in any time frame. This indicator is more made for scalp trading or people that wants to trade on shorter time frames, which is called scalp trading. But the rule of thumb is buy below value and sell above value. Keep you disciplined to the existing trend. So let's see that when the price is respecting the 100 AMA, it's making a bounce. You can see that on this time frame that when Bitcoin reaches the 100 AMA, it's making a bounce again. So every time when it touches the 50 MA of 100 AMA, it's a good sign of buying. Look, you can see it over here. It's respecting the 50 EMA level. So it's a good indication of buying the asset. Okay, the 50 EMA shows the short trend, the 100 EMA shows the average trend, and the 150 EMA shows the long-term trend. So it's, from my experience, a longer time frame is king, so better trade on longer time frames. This is what I'm gonna show you guys. And we're gonna also show you guys how to use. So we have this exponential moving averages over here. You can see it. If you click it on here, you can see all the lines. The red line is the 20 EMA, 50 is the orange, the 100 is the light blue, and 200 is the dark blue. So you can see it over here. When it's a good time to buy an asset, when it's a good time to sell an asset. And you can just find over here EMA, then you find that one, Dr. Sweets, and then you click on favorite, and then you have this indicator. All right, let's continue. So more indicators that I'm using is, these are the indicators. You can just pause the video and save it to your favorites. But the ones that I'm using right now is this one. So these are the indicators that I'm using. I don't use a lot anymore. So I use some certain templates, which is number one. So volume, EMA, and CPR. I use the CPR as well. I'm gonna discuss this in the next chapter, so don't worry. So we have another template, which is with the VPVR. So you don't have to select all the indicators again over and over. So anyways, so yeah, you can, this is a screenshot of the indicators I used back in the days, but I still see a lot of indicators I'm still using. So, but it's good for your own learning curve to look at the market from different perspective and to look from different indicators as well. So you got to keep that in mind. All right, the disclaimer, guys, that was the presentation of this chapter. I hope you learned a lot. Always realize that you have to always do your own research, and this is not financial advice. So this is just my way of sharing my experience with all of you guys, so you can have so you become more independent and not too much dependent on all those people on YouTube, because they become super bullish when the price is going up. They become super bearish when the price is going down. So that's why it's also important to have your own perspective on the charts, on the market, so you can control your own emotion and follow your own strategy. That's important in life. Make sure that you can do that, you're totally independent in life, so you can use your own direction where to go. All right, guys, I want to thank you guys for your time and attention. And as always, happy learning. Thank you so much.